What's going on, everybody? Michael Silva here, very excited to share today's video. If you've been involved in crypto, like many people have, wouldn't it be nice to know when you can move to the side when you see 50, 60, 80% corrections in the market? Well, the indicator that I'm going to be showing you today, I'm going to show you how to build it. I'm going to show you why it's important. I'm going to show you a strategy too that you can use yourself to avoid big fallouts like we've recently seen. So let's get into today's episode. Welcome back, everybody. Before I show you how to build the indicator and how to use the indicator and how it's so powerful, let me show you the idea where it came from. It started with an award-winning research paper known as the lumber to gold ratio, or lumber worth its weight in gold, offense and defense in active portfolio management. This is developed by Michael Gayad, and that is one person that I interviewed on this channel. And what they found was that relative movement, keyword relative movement, of lumber to gold provides important information on economic growth and inflation expectations, which gradually diffuses with a lag to the stock and bond markets. When you compare the two asset classes and you look at the rate of change going back and forth between the two, it helps determine when the market might be at risk. Now, he used lumber for specific reasons and gold for specific reasons. If you want to find out more about that, I suggest reading this white paper and also just listening to the interview that we did on this channel. The strategy that we're going to be using is comparing the relative strength from Bitcoin to gold. Bitcoin, it's been gaining massive popularity, building a huge market cap, but yet we've been seeing monster corrections. Some say that it is a safe haven. Others people say that it is not. I strongly believe that gold is still that safe haven. So we're going to be comparing these two assets using the rate of change. Now, this all started actually as just a joke, but turned into something very real. I originally called this, and I could still call it today, I don't really have a great name for it. I called it the Saylor to Schiff rotation strategy. Why the Saylor to Schiff rotation strategy? Well, if you're in Bitcoin, you know who Michael Saylor is. He is pretty much the furthest bull on the spectrum when it comes to Bitcoin. And then you have Peter Schiff on the very opposite end, not really liking Bitcoin whatsoever, but fully on board for gold. You have two completely different personality types. Now, what we're going to be doing is be looking at the rate of change at which these go back and forth, the rate of change on the relative strength. Now, this might sound very complicated, but that's okay because we're going to really simplify it. I'm going to show you how to design this chart right here so you can follow along. Now, check this out right here. This was right here at the beginning of April. The sell signal was triggered, and we saw, well, from peak to trough, we saw more than a 45% correction, but the sell signal was triggered, and we've seen right as of now down 45% that you could have saved yourself from. Now, we're still in a risk-off environment currently as of right now, so you would be not bought in at this particular point in time, but we're going to be walking through that strategy. Let me show you how to design the chart, and then we'll walk through it. All right, so we're here at stockcharts.com. You do not need an account here. You can do this for free. However, the chart might look just slightly different. So let's go ahead right at the homepage. What we're going to do is we're going to search this. Go ahead and put a $BTC USD. That is Bitcoin right there. And then we're going to go ahead and do a colon, and we're going to go $GOLD. This is going to allow us to look at the ratio of Bitcoin to gold. So I'm going to go ahead and hit go. And we're going to go ahead and get a chart up like this. I'm going to see if I can make it bigger. All right, so this is what originally pops up. Now we're going to start designing this indicator to make it a little bit better to look at. So what we're going to first do is we're going to go ahead and remove, you can keep log scale if you want. This is just completely up to you. And during certain parts of the chart, you can, but I'm going to go ahead and remove log. I'm going to go ahead and remove these overlays right here. And then I'm going to go ahead and remove both the MACD and the RSI, and I'm gonna go ahead and hit update. So the chart's gonna look just like this now. Now, I want to go ahead and actually make this invisible. So from type, we're gonna go ahead and click here. We're gonna scroll down to invisible. Now, if I open that up, you can see there's nothing on the chart. Now from this point, we're gonna do an indicator, and the indicator that we're gonna be using is called the rate of change. Now, I'm not going to go into too much detail of the calculation and why the rate of change is important, but quickly, if you just Google it, you can learn more about it. But what is the rate of change? It is the speed at which variable changes over a specific period of time. Now, the ROC, which is the rate of change, it's often used speaking about momentum, and it can generally be expressed as a ratio, a change in one variable relative to a corresponding change in another. Now, that's what we are doing. We are looking at the corresponding rate of change between Bitcoin and gold to really determine, which one is going to have the advantage. So we're back here at stockcharts.com. What you want to go ahead and do is change this to weekly time. And then, like I said, you're going to have rate of change down here. It's going to be at 12. We're going to make that the number 4. And then we're going to go ahead and hit update. Now we see a rate of change down here. Okay, that is step 1, but we got some more work to do. What we're going to do now is we're going to go ahead and put that behind the price. We'll go ahead and update that. So now it's going to start looking a little bit like this. Then we're going to add in another indicator, and that indicator is going to be called price. Now the price, what we're going to be doing is changing SPX to BTC USD. So click that. We're going to go ahead and hit style the candlesticks. From this point, we want to hit height. We want to change that to 1 and go ahead and hit update so it looks like this. Here is our sell signal. That's all you need to do to develop it. So now that we know obviously how to build it, we're going to show soon why it's so powerful and actually how to use it. Now there's going to be many different ways that you can use this. You can just use this as a sell signal, but then you're left with, okay, so after I sell, when do I buy, etc., etc. So I wrote down a couple of rules here on this specific strategy, and then we can kind of walk through the charts a little bit better. So the first thing that I want to really focus on is the sell signal. And the sell signal is activated here when the 4-week rate of change, which we put in the 4-week rate of change on the stock charts, crosses down through 0, okay? And then what we do after that is we place a stop loss order below the low of that weekly candle's low. All right, I'm gonna walk you through what this looks like on the charts, but just keep in mind, this sounds confusing, but once you see it in action, it makes it a little bit different and quite powerful. Now, if the price action does not reach the stop loss and next weekly candle prints a higher low, what does that mean? So if you're not stopped out and the price keeps moving up in Bitcoin, guess what? You're gonna be updating your stop loss to the low of each new week that it continually presses further. Now, any buy signal, which we'll talk about buy signals later, that occurs during the time that you're currently on a sell signal. It's an invalid buy signal because you're still in that position. Then once you are stopped out, then you wait for your next buy signal. Now let's talk examples. So the stock charts doesn't allow me to go back way too far, and I use this research on quite a few of these dates here. So we're gonna be going through that, but we're gonna be looking at some big corrections. You can see here, these are some Bitcoin historical corrections. So I wanna see, okay, when did the sell signal trigger? And were we allowed to save ourselves from seeing these big market pullbacks? So let's go ahead and look at some of these pullbacks, starting with the most recent. All right, so up top, we have the rate of change, the 4-week rate of change, comparing it to obviously Bitcoin over gold. This is our indicator. We crossed here on the weekly time frame just there at the beginning of April. So when the sell signal crosses down from a high level through this marker, which is 0, you'll see here it's a different print, but if you look over here, you can see the 0 marker. The reason why it's doing that is because we have an invisible relative strength behind it. So when it crosses through that dashed line, which is 0, that is technically the sell signal. And what do we do during that time? You put a stop loss under that weekly candle right there. So we put it under. You can give it some space if you'd like. That's totally fine. And what took place? Well, the candle actually moved to a significantly higher portion, so we weren't stopped out. However, there also came down here, so it looked very scary, and it stopped us out at this point. Now, look what happened there shortly after the sell signal was moving down. There's been over a 45% correction from getting out of that position. Pretty powerful. And as you can see here, this is up to date as of May 21st, 2021. We are not currently on a buy signal. So it worked for this time. Let's look at the other time. All right, so here we're looking at 2019 through 2020. We saw some big market movements. There's a lot of things going on here, and I want to walk you through kind of that strategy. Now, if you look at all these arrows, these are just the green and the red arrows. They're all about buy signals. So the red means it's an invalid buy signal. The green arrow means it's a confirmed buy signal. Now the red lines going through the screen, the vertical ones, that's just to show you when we crossed through. Now, it's for some reason it's off a little bit, for I don't know why, but we crossed through the area of 0, the rate of change. So that's the sell signal. Okay, so let's walk through this. We saw what here take place when the sell signal was activated here in just about mid-July. Okay, well, the sell signal was activated. We put our stop loss down below that weekly candle. Now, this weekly candle was not actually triggered out. You notice here how the price action put in a higher low. So we would have, technically it was right around the same, so we would have kept our stop loss the same. The next candle went even higher low, so we moved the stop loss there. And then at that point, you did see this buy signal activated right here, but it was in red. However, we crossed back down through 0. The reason why this is in red is because that is an invalid buy signal because we were currently in a position. Then we got stopped out here, and it went down 29% from this stop out point all the way down to right here. So that saved us 29%. Now, if I were to move this over just slightly, I think it falls between these 2 weeks. So well, you could look at this candle right here and had a stop loss right below it. Then you would have got triggered out on that stop loss, and you would have entered. This would have been a valid buy signal, okay? And you would have had, now we'll talk about buy signals later, but technically you would have had a buy stop here. You would have caught that move up, and then you would have then got stopped back out. So there's a couple ways you can look at this. Sometimes people want to wait the following week. That would make sense to me. That's part of Michael Guyad's strategy. If the sell signal is activated, you wait for the following week to go more risk off. Okay, now let's keep continuing down this road. This was a sell signal right here in mid-September. We put the stop loss below that. Then guess what took place? We didn't get a continuation upside move. The momentum was shifting in gold's favor. This right here was boom to the downside. It would have saved you 23%. And notice the big moves swinging back and forth. That was the buy signal right here, but we're not going to talk about those right now. Another sell signal in November, that would have saved 22%. You would have had the stop loss right below the low of that candle. And guess what? This candle would have came through and got that knocked out. The same thing goes right here on this specific sell signal right here. You can see that this candle was the sell signal candle, so you had to add a stop loss below the low of this one. You know, if I move this over slightly, you can argue that it could be this one. That would make sense too. If you wanted to put a stop below the low of the previous week, that can give it more room. The same thing would have occurred though. You can see you would have moved your stop loss up as the weeks progressed all the way up to here. And this point, you would have got stopped out by this candle, and then it went up a little bit higher, and then it went crashing down 60% in 2020. So you would have saved yourself from all of that. And take note that there was a buy signal, which we'll get into those here shortly. Now, we all remember 2018 when all the euphoria was running the market up significantly. The next slide after this is, okay, well, could we have made money on that way up? Well, I'll go over that shortly, but when would the sell signal have activated? Well, the sell signal, you can see that we had this monster move, blow off top type action take place. So you can see that it's not like super accurate. It doesn't pin the tops, but it does tell you, the sell signal tells you, okay, there's a risk up ahead potentially. There's a possibility that you might see more downwards pressure in the price of Bitcoin. So when it had that crossover, we add the stop loss below that weekly candle, and you can see here, when it got triggered with this weekly candle in early 2018, that would have got us stopped out. And if you measure from that stop out to really the bottom here, as low as it goes, so you can measure it how you want to, but from stop out to the trough, it's 53% drop. Now you can see here we had another buy signal that was activated, then we had a really quick sell signal. That sell signal, we put the stop loss in, we got triggered out, it went 27% lower. Very crazy stuff. Now, like I said, we have buy signals to take place. We'll talk about the buy signal here shortly. The next here was in August. This was that big move to the downside. So just think, during this price action, this whole market movement, a lot of people bought here at the top because of these euphoric, prices, and then they just held it all the way down. And if they, got worn out down here, then they sold at a massive loss. Now, this portion is known as an accumulation phase, and as you know, we know where the price of Bitcoin went from these stages, but this wears out a lot of people. People that have been buying up here, they think that, okay, the price is never coming back, I just want my money, and then they get tired of it. Okay, now, you might have diamond hands, but this is, it is what it is. We are going through a very similar type phase right now where we don't know what the outcome might be. Now, the next sell signal was activated here in August. We put our stop loss below, but notice how the price action kept going up higher. So you kept on moving your stop loss up, and then we got stopped out this week here on this candle. Weeks later, okay, that big candle got us stopped out. You can see here that these buy signals right here, which we'll talk as why they're red candles. It's simply because our buy signal was never activated. It never triggered that specific signal based on the strategy that I'll share with you. So it continued to fall from that stop out down 56% to the low. And as you can see here, we had a buy signal here in February as the price started to pick up. So I hope I'm showing you enough examples here to really just show you how powerful this signal can actually be. And I'll have everything in the description as far as the method of how to kind of move in and out of this stuff. But now you can see here, sell signal, it was activated. We had our stop loss, saved us from a 15% correction. Right here, it was activated in July. You can see the price action continue to move up. Then we were stopped out from stop out to the low was 27%. And yes, if you're wondering if a buy signal kicked back in, guess what? We'll be pulling that chart up here shortly. The same chart, I'm going to show you what it looks like on the upside. So you can see we saved 15%, 27%, 20%, 19, 25%. But this was during the time when it went from 250, way up here to 6,000 plus. Then over here, sell signal was triggered, 19% drawdown, but it quickly bounced back. And same right here in September, we saw from stop out to a low down 25%. So some very, very big price swings taking place. And a lot of the times, these price swings, people don't want to be involved in. And most of the people, uninformed investors, typically buy at the top because as you're moving up, it's all of a sudden in news more. People are talking about it more. And then all of a sudden, they're buying the very tippy tops. And you see these corrections. They're then they sell their positions. Why? The smart money moves back in. So what does this look like if you were to do buy signals? Well, first off, let's look at what the buy signal is. So now that we know what the sell signal is and kind of the rules around that, let's look at the buy signal. The buy signal for buying Bitcoin and feeling a little bit more confident is when the 4-week rate of change crosses up through zero. So that's going from the downside and crosses up through that midline. Then what you do is you place a buy stop order above that weekly candle's high. What is a buy stop order? It means that you only buy in when the price of Bitcoin, just like a stop loss, you get stopped out, but now we're doing if the price goes above that range, that's when you buy. So you got to wait, you got to be patient, you need confirmation. Now, if the price action does not reach the entry point by the time the rate of change crosses back down through zero, the buy signal is deactivated and we wait for the next buy signal. This is just to help with risk management, and I'll show you what that looks like. So here is the very same chart, but now we're highlighting the green boxes is when you are on buy signals. So for example, when we got this buy signal, we had an entry point above that weekly candle. It was triggered, and then we moved up, we moved down, we moved back up for a 54% gain until we were stopped out by this candle. Now, this period of time, we were on the sell signal. We were then on a buy signal right here, but the price barely moved. Then we crossed very quickly to a sell signal. You can see it cross down through it, and then we crossed right back up very quickly and abruptly. So this is where the risk management really takes place. You can see we've just scorched up 33%. We had a sell signal. It wasn't triggered till this point, saved us from that move to the downside. The next buy signal was right here, up 75%. And keep in mind, this lasted from September of 2016 to March-ish 2017, so quite a long time there. Then as the sell signal was activated, you can see right here, it just went through a period of just very calmness. Now, you might think, well, the sell signal was right here in the middle of this box. How does that work? Well, actually, there was a sell signal that took place here at this candle, so we moved our stop loss up as that time continued, and then this candle is the one that stopped us out. Then we moved down and back up to another buy signal. That run right there was 73% up into the next sell signal, saving you from this distribution right here, that just a quick rip to the downside. And then we had a 32% buy signal. And we all know what took place there shortly after. We went higher, but then we crashed down, and then we already talked about that sell signal. So what do you do with this? Well, first off, there's a lot of different methods you can use. First, you can just let you know when it crosses down through zero and all of a sudden it stops out or hits below that candle. That is a time where you should be a little concerned about your overall capital. What does that mean? Well, if you were to move out your capital out of Bitcoin into cash, into gold, into just something on the sidelines, then you are still protected on that dip. But a lot of people might be saying, no, you just buy the dip, buy the dip, buy the dip. That's totally fine to do. But you don't know if the price is going to continually move up. At any point, the crash can wipe you out at 80% and land in a bear market for a long period of time. So this helps you preserve capital. Now, if you want to buy the dips, there's also another strategy you can do. When the sell signal takes place, you can move into cash, but then continually to buy the dip with other money as you're protecting your main source of capital. Then as the buy signal activates, you can move your capital back in along with your monthly, if you're buying it monthly, weekly, whatever the case is with your Bitcoin. Then when the sell signal moves back, you move your capital out of the account, and then you continually to average and buy that dip as well. And then when the buy signal comes back into play, then you move your main capital back into that source as well. So it helps protect during these times of panic. That's really what they are. All right, everybody, I showed you how to build this indicator. I showed you how to use this indicator. You can look in the description if you want just a copy of those words that I put together. Look at this, doesn't time anything perfectly, but at least it helps to show you that we've seen through history when we might go through periods of, okay, we might want to be a little cautious here. What should we do when we see this rate of change move down through zero? That's all I got for you, everybody. Hope you enjoyed it. See you later.